Good evening to all of you. Welcome to learning sessions. And today in this video, we are going to start with the new chapter from the module A, that is IFSC and the gift city. Now, what is IFSC? This is International Financial Service Center. And also, we are going to learn about the gift city. So do confirm the audio video quality at the earliest so that we can proceed. And further, if you have not subscribed to the channel, do subscribe at the earliest. The CAIIB registrations are already open. Do register for the CAIIB 2026 exams and do follow our channel videos so as for the sure success in the CAIIB exam. So the audio video quality is working all fine. So let's start the session. The chapter is 9th chapter from the module A of the BFM, right? And it's about the IFSC, that is International Financial Services Center, and the gift city. Now, what is actually IFSC? So IFSC, we can say it's a special jurisdiction. It's a special territory within a country where the financial services basically are provided to the non-residents and residents in the foreign currency. So whether we are talking about the non-residents or the residents, we are going to provide the financial services. And these financial services which will be offered to the residents and non-residents within the special territory within the country, and those financial services are provided in the foreign currency. Basically, these centers are established so as to facilitate the international financial transaction, let's say banking transactions, insurance transactions, digital marketing transactions, asset management transactions. And the main purpose is related to that we want to bring the global financial services within the domestic jurisdiction, right? So India established its first IFSC in Gujarat. That is basically the gift city. Gift city is basically Gujarat International Finance Tech City. Gujarat International Finance Tech City. That's the gift city that basically is the IFSC, which is established by the India, and it is the first international financial services center in India. And the regulatory authority which is responsible so as to manage the IFSC, it is said to be the IFSCA. It is the IFSCA, that is the International Financial Services Center Authority, right? So that's the case. And IFSCA is going to integrate the multiple things. So here we are talking about IFSC. It's a special territory which is going to provide the services to the residents. Services are provided to the non-residents, and these financial services are provided in foreign currency. Clear? And IFSC A, basically that is the International Financial Services Center Authority Act 2019. The IFSCA was established. So IFSC is managed by, it's basically regulated by IFSCA, right? And it's integrating the multiple regulatory functions. Like those functions were basically, first of all, previously held by the different authorities. Like the functions were performed by Reserve Bank of India. Some of them were performed by the SEBI, Securities and Exchange Board of India, and PFRDA and the IRDA. But now all these functions are performed by the IFSC. So IFSCA is a single unified regulator for the same. Clear with it, right? So IFSC basically caters the customers outside the jurisdiction of the domestic economy. So it's not about, we are talking about the international economy, but it's outside the domestic economy, but within the Indian territory, within the country's territory. And it deals with the different things like financial products, digital products, marketing products, finance and services. And those services are available to the individual, to the corporates, to the governments, and also the asset management and the global portfolio diversification are undertaken by the pension funds, insurance companies, and the mutual funds. It's also doing the wealth management, global tax management, global and regional corporate regime management. All these functions are performed under the IFS. Clear with it? And what about the tax liability? What about the taxability? We'll also be covering that topic. So first of all, it's about the scope of the IFSC in India. So banks which are there in the International Financial Service Center, those do operate as the foreign banks in the home country. So let's say if there is bank in IFSC, that will be acting as a bank in the foreign country. That's the first case. So International Financial Services Centers basically does allow the banks so as to operate offshore banking units that deals mainly in the foreign currency transactions. So let's say if there is IFSC and there is a bank in this IFSC, then this bank will be acting as OBU, that is offshore banking unit. So it will be providing the services, but it will be dealing in the foreign currency transactions, right? So you can be taking the deposits from the non-resident citizens and further can extend the loans to the non-residents, right? So they are to take the deposits from the non-residents and further they will be providing the loans to the non-residents. And also they are permitted that they can be lending in foreign currency to both resident corporates and also the non-residents. So they are permitted. So they can be taking the deposit from the non-residents and further they can be lending to the residents or the non-residents also. So what is the main objective related to it? That we want to develop a strong global connect. We want to develop a strong global connect, and also whatsoever the different needs of the Indian economy are, we want to serve the same. We want to give the exposure to the country related to the global economy, right? And the SCZ Act, that the Special Economic Zone Act, basically does allow so as to set up the IFSC in the SCZ. So IFSC can be set up in the SCZ also. In the Special Economic Zone, the IFSC can be set up, right? And further, under the SCZ, if you want to set up the IFSC, you have to take the approval from the central government, right? But the India is having many restrictions on the financial sector. But SCZ can be acting as a testing ground because in that particular scenario, the financial rules would be different. The financial rules would be different, and there is exemption from the STT. So whatsoever the STT, that is a securities transaction tax, which is levied under section 90 of the 98 of the Finance Act 2004. There is exemption in that scenario if the transactions are being entered into by the non-residents through the IFSC. So otherwise, if you're doing the transaction, the STT will be applied. But if you're doing the transactions through the IFSC, then the STT won't be applied. There is a basically exemption related to it. So you are given an exemption in that scenario. Clear with it? The next, it is about the gift city. As I told you, it is Gujarat International Financial Technology Tech City, right? So it is Gujarat International Financial Technology Tech City. You should be knowing that. And further, it is the first IFSC which is established here in India, and it is a planned financial and technology hub, right? And further, what is the objective of the gift city? So as to create a global financial hub in India. We want to create a global financial hub in India so that we can be competing with the international financial centers like London, Singapore, and Dubai. There are multiple international financial centers. So it's basically kind of Indian product that we are going to offer as a IFS, right? So under that, basically, we are talking about it started functioning from 5th of the December 2019 with 225 companies, and there were 3 PSBs, public sector banks, 9 private sector banks, and 3 MNC banks, so as to fulfill the global objectives. So what are the different opportunities which are available under the gift city? First of all, you'll be having the access to a very large remote economy. You'll be having the access to a large remote economy, because in gift city or in any of the IFSC, you'll be having the benefit like gift city enables a financial institutions as to serve global client. So you can be serving the global clients through the IFS. So it's a huge economy which will be available to you. We can be serving the offshore markets from India, right? And further, you'll be having the access to the international market, because entities which are operating in the IFSC, those can be participating in the global capital markets. Those can be participating in the foreign exchange markets, international lending activities. They are basically participating. So you're having the access to the international market. That's important feature, very important point. And further, you can be basically connecting Indian diaspora, right? So basically, Gift City provides a financial gateway. It provides a financial gateway. So let's say the combined wealth is even more than 3 trillion USDs through the IFSC, the diaspora, the persons who are sitting, Indian persons who are sitting outside India, right? They can be channelizing the funds into India, right? In a structured way through the investment platforms. So that's the benefit. You'll be having the leverage over the other particular, let's say, businesses, right? And also, IFSC serves as a two-way gateway for international financial services. Like you'll be having the inbound activities, you'll be having the outbound activities. Inbound activities mean foreign investments into India and global market participation in India. And outbound gateway means what? Debt overseas investment by the Indian companies. So you can be taking the funds from the global economy, and further you can also be investing the funds into the global economy, right? So that's the benefit. And further, the next one, it's about the global in-house centers. Global in-house centers, that is GIHCs, right? So Gift City is basically having a very major potential, right, for the major hubs because competitive cost structure is there. You're having the available, let's say, skilled workforce is there, strong financial infrastructure is there, and you can be attracting multinational corporates so as to establish their financial and operational centers in India, right? And also you can be attracting the global talent to world-class fintech hub in the Gift City. So what sort of the financial tech hub is there in Gift City? You can be definitely be attracting the global talent toward it, right? Further, you're having the key business opportunities in this scenario. The key business opportunities are also available in this scenario. First of all, it's about the wholesale banking. Now, the wholesale banking services in IFSC basically does include many of the services like ECB financing can be done and trade finance services is available. Guarantee and indemnity business could be there. Any kind of the particular need which is required by the corporates, right? Or interbanks transaction like syndication of the global large borrower loans, right? Risk participation in the international loan syndication. So those all functions can be performed under the IFSC wholesale banking. And when we're talking about the capital markets opportunities are also available in case of the IFSC. Like the merchant banking services are available. You can be investing the funds globally, right? And further, you can be participating in global bond listing and trading purposes, and you can be trading the derivatives in the international markets. And also, the retail banking benefits are also available. Like retail financial services, there are available in IFSC, like wealth management services. And let's say there is HNI, high net worth individual, and wealth management is to be done, or private banking services to be availed by the HNI, that's available, right? Foreign currency deposit accounts are available. You can be opening the foreign currency accounts. FCAs can be opened in the IFSCs. That's basically allowed. So retail banking services in IFSC are there so as to target the non-resident Indians. So retail banking services are there so as to target the non-resident Indians and the global investors. And the global investors. You want to target those under the retail banking services. Further, it's about the treasury management. Like you can be doing the asset liability management, you can be doing the interest rate, you can be participating in interest rate derivatives, and also we can be participating in NDF. What is NDF? Non-deliverable forward trading. Non-deliverable forward trading in Indian rupees and other currencies is available. You can also be participating in risk management. Like you can be doing the derivative trading, and further you can be participating in the interest rate derivatives or derivatives or related to forex, credit. You can be participating in them also under the treasury management. And further, other opportunities are available, like you can be acting as a distribution of the mutual funds, for the distribution of the insurance products, for the portfolio management services, etc. So these are the ancillary products which are available through which the fee-based income can be earned. So from this particular perspective, if we look at the key business opportunities for the gift city, so it would be related to the wholesale banking, capital market, retail banking services, treasury management, other opportunities. So what I meant to say that you just name the service and that is available there in case of the IFSCs. Clear? Now, what are the guidelines for setting up the IFSC banking units, that is IBU, by the Indian banks? What are the guidelines related to it? We are to look into it. We are to consider the different facts, that what are the different guidelines for this case. So the first case, it's about the eligibility. It's about the eligibility. So if you want to establish, like, following banks are basically eligible. Which banks are eligible? Public sector banks are eligible and the private sector banks are eligible. I just gave you the idea that in 2019, when the gift city was formed, there were 3 PSBs and 9 private sector banks. So definitely the public sector banks and private sector banks are authorized that they can be dealing in the foreign exchange, right? So each eligible bank would be permitted so as to set up only one IBU in the each international financial service center. So it's not the case that you can be having the multiple IBUs. You can be having only one IBU, like one IBU in each IFSC. That's it, right? What is IBU? It is a IFSC banking unit. So you can be setting up only one banking unit per branch, per bank, we can say, in one IFSC. So if there are 10 IFSCs, you can be having the 10 IBUs in 10 IFSCs, right? But license is to be taken and prior approval is to be taken from the Reserve Bank of India. It is to be taken from the Reserve Bank of India. So IBU will be treated as a foreign branch of the Indian bank. So let's say HDFC is having the IBU in Gift City, is having the IBU in Gift City. So this IBU will be considered as a foreign branch of the HDFC bank for basic other purposes. It will be considered as a foreign branch of the Indian bank. And it operates under the regulatory framework which will be applicable to the IFSC units, right? And bank will be operating under the foreign currencies mainly. And what is the capital requirement for this particular purpose? Minimum capital requirement. It is 20 million USD. The parent bank must be providing at least 20 million USD as the minimum capital, right? So as to establish the IBU. And the capital is to be maintained at each and every time. And the capital will be provided by the parent bank. So if HDFC Bank is going to open the IBU in the IFSC, HDFC Bank is to provide the 20 million USD capital to the IBU. And also, are the reserve requirements applicable? No, because IFSC regulations would be applicable. So CRR is not applicable, SLR is not applicable, right? And also that will be enabling the IBUs as to operate more competitively. Okay. Further, it's about the resources and deployment of the funds. Now, what are the different sources of the funds? So if we look at the sources or resources, you can be having the deposits by the NRIs or the high net worth individuals or the global investors or the overseas branches of the Indian banks. They can be depositing the funds. So IBUs are to mobilize the funds from the NRIs, from the overseas branches, from the high net worth individuals, from the corporates. They can be mobilizing the funds, right? And also they can be mobilizing the funds from the other IBUs in the IFSC. So that's also allowed. And if we talk about the deployment of the funds, that can be used so as to lend the non-residents, that can be used so as to lend the residents also. That's basically allowed. So you can be lending to the residents or the non-residents. Further, it's about the operational aspects. Like, what are the operational aspects? So cash transactions are permitted? No. No cash transactions. Kindly please take a note. In case of IBUs, the cash transactions and the saving accounts are not permitted. The deposits can be maintained in the form of the current account only or in the form of the term deposits only, but no saving account and no cash transactions are allowed, right? And if we look at the compliance requirements, the KYC norms, The normal KYC norms would be applicable, the AML guidelines would be applicable, and the deposit insurance would not be available under the DICGC. So that won't be available, right? So the insurance cover won't be available. So the deposits under the IBU, that is not insured. Like in case of the DICGC, each bank account is having the, as per the as per the depositor, is having a basic cover of 5 lakh rupees per account, saving for saving account and current accounts. But that's not the case with the deposits in IBU. Clear with it? Further now, it's about the role of IFSCA. IFSCA is International Financial Services Centers Authority. So it's basically authority, and further, previously there were multiple authorities, but now there is unified authority. Like existing regulators like RBI, SEBI, PFRDA, IRDA, those basically used to regulate the IFSC, but now there is a single IFSCA, which is established under the IFSCA Act 2019. And under that, the IFSCA is to be regulated. And IFSCA is basically headquartered in Gandhinagar, Gujarat. So if we look at the regulatory framework, minimum capital of 20 million is to be given by the parent bank, as I just told you. And you are to obtain the no objection letter from the home country regulator so as to set up the IBU in the IFSC, and letter of comfort from the parent bank for the liquidity purpose for the resource support to the IFSC. Why this letter of comfort is required? This is the case because let's say if there is liquidity crunch, in that scenario, it's an undertaking which is given by the parent bank, that in case if there is liquidity crunch, then the parent bank will be providing that particular liquidity to the IBU. And IBUs are not to maintain the SLR, CRR, I already told you, and IBAs are to maintain the LCR, liquidity coverage ratio, and the NSFR. Those were basically applicable under the Basel III rules. Those are to be maintained. But the same way be maintained at the parent level with the IFSC permissions. So that's basically allowed. If the parent bank is maintaining the same, then the IBO is not to take care of the same, right? So that's basically allowed. And further, the leverage ratio may be maintained by the parent bank. Leverage ratio, that is to be maintained by the parent bank. These are the indicators from the Basel III. We have already learned about it. And further, IPAs are required to maintain a retail deposit reserve ratio on daily basis. 3% of the deposits raised from the individuals outstanding as the end of the day, that particular reserve is to be maintained, and that we name it to be the retail deposit reserve ratio. Retail deposit reserve ratio on daily basis, 3% of this is to be maintained. And whatsoever the directions and whatsoever the instructions are given by the home regulator, those are to be followed. Specified the regulations which will be specified by the IFSC, because for IFSC the regulator is IFSC. Now, what are the activities which are permissible by the IBUs? The different activities which are permissible at the IBUs, that is a very important point that we should be taking care, that what different activities can be performed by the IFSCA banking unit. IFSC banking unit. So first of all, the transactions with the residents and non-residents. The first point, it's about the transactions with the residents and non-residents. So for residents in India, they can be the deployment of the funds. Like you can be using the funds of the residents in India for the deployment purposes. And further, the from non-resident entities, you can be, making them the resource, and also you can be deploying their funds. But the IBUs cannot be transacting with the individuals. IBUs cannot be transacting with the individuals. They cannot be transacting with the high net worth individuals. They cannot be transacting with the, right? They cannot be transacting with the uh, high net worth individuals and the retail customers. But if there is corporate, they can be dealing with it. If there are financial institutions, they can be dealing with it. If there is institutional investors, they can be dealing with it. After that, it's about the currency of the transaction. So whatsoever the currency of the transaction it's in foreign currency other than the Indian rupee. But there is exception, like a special rupee account may be maintained so as to meet the administrative and statutory expenses. That's about the special rupee account that can be allowed. And further, it's about the wholly owned subsidiaries and joint ventures. So IBUs are basically permitted that they can be conducting the transactions with the wholly owned subsidiaries of Indian companies located abroad, right? So wholly owned subsidiaries of the Indian companies or the joint ventures of the Indian companies which are registered abroad, IBUs can be dealing with them, right? Because cross-border financing, international business expansion, that is basically allowed. And if we are talking about the IBUs, the saving bank deposit account is not allowed. I've already told you the foreign currency current account is allowed or foreign currency term deposit account is allowed, but the saving bank account is not allowed. We can open the foreign currency current account, right? And further, the foreign currency term deposit account can be opened, but not related to the Indian rupee account, not allowed. Saving bank account, not allowed, right? And further, the check facility won't be available. Like if you're having the current account, the check facility will not be available for you. Payment mechanism we are talking about. Whatsoever the transactions are to be conducted, those are to be conducted through the bank transfer or the electronic transfer. So that can be done through the bank transfer or through the electronic transfer, but not through the checks, not through the checks. And further, IBUs can be supporting the international trade. Like they can be acting as a factoring for the export receivables or forfeiting for the export receivables. So they can be undertaking the factoring or forfeiting transactions. That can be done. That can be done. And if you want to deal in the derivative products, in that scenario, you have to take the prior approval from the Reserve Bank of India. The IBUs can be dealing in the foreign exchange derivatives, in the credit derivatives, in the interest rate derivatives, but to take a prior approval from the Reserve Bank of India. And further, it's about the escrow accounts for the GDR and the ADR. GDR is Global Depository Receipt and the ADR is American Depository Receipt. So the main purpose related to the escrow account is so as to temporarily hold the subscription funds. So if there is any subscription fund related to the ADR, related to the GDR, right, until the receipts are issued, right, the escrow account can be maintained. The escrow account can be maintained under the IBU. So that can be done. Further, they can be acting as a underwriter, right? They can be acting as an underwriter. Let's say if the overseas bond arrangement is to be done, right? For INR denominated overseas bonds, which are issued by the Indian entities in international market. So let's say there is Indian entity XYZ and they want to issue the bonds of Indian company, but in international market in Indian rupee, right? In that scenario, the IBU can be acting as underwriter. The IBU can be acting as underwriter that if minimum subscription is not there, then the underwriter is going to do what? Underwriter is going to subscribe to those debt instruments. So it can be acting as underwriter, it can be acting as arranger, right? Further, it's about the exposure ceiling. Now, exposure ceiling is linked with tier 1 capital. It is linked with the tier 1 capital, right? So for the single borrower, the exposure can be maximum of 5% of the parent bank tier 1 capital. It's not about the IBU. It's about the 5% of the parent bank tier 1 capital. And also for the group borrower, it is 10% of the parent bank tier 1 capital. For the group borrower, it is 10% of the parent bank tier 1 capital. And as I told you, for the KYC guidelines, the Indian KYC guidelines would be applicable. We have to follow the AML CFT guidelines. So that's definitely a truth that all the AML CFT instructions are to be followed. So that's the point number 11. 12 actually. The 11th point was related to the exposure saving, right? And all the instructions will be issued by the Reserve Bank of India, whatsoever given, those are to be followed. Those are to be followed. And IBU will be regulated and supervised by the Reserve Bank of India. That will be regulated and supervised by India, by the Reserve Bank of India, right? Subject to the regulatory prudential norms applicable to the IFSC banking operations, right? That is to be taken care. And if we talk about the balance sheet and the currency restriction, the balance sheet is to be prepared in foreign currency only because they cannot conduct the normal transaction in Indian rupee. right? So the normal transaction in Indian rupee cannot be conducted. I just gave it exemption that a special rupee account can be opened for the statutory expenses, for the administrative expenses purposes only. But all the other transactions will be conducted in foreign currency only. All the other transactions will be conducted in the foreign currency only. So balance sheet is to be prepared in the foreign currency only, as I've already told you. Clear with it? Further, it's about the domestic transactions, like domestic markets. So there is a restrictions related to that the IBU cannot be participating in the domestic Indian financial markets. Like they cannot be participating into the they cannot be participating in the call market or notice market or term market, right? Domestic term market or domestic foreign exchange market or domestic payment systems. They cannot be participating into these systems. That's not allowed to the IBU, right? And further, it is required for the IBU so as to open the separate Nostro account with the correspondent banks. Now, let's say if the accounts are being maintained by the parent bank with the same bank, right, with the same correspondent bank, but still the IBUs are to maintain the separate Nostro accounts with the correspondent banks. And there is a special account that is a SNRR account, that is special non-resident rupee account. So IBU can be maintaining the SNRR account, special non-resident rupee account with the domestic authorized dealer bank. So if they want to open, so let's say here is a IBU. IBU can be opening a SNRR account with the authorized dealer bank in India. So that will be special non-resident rupee account that can be maintained by the IBU with the authorized dealer bank. So what will be the funding condition? That these accounts should be funded through the foreign currency remittances or via the international banking channel. So either the foreign currency will be funded or it will be through the international banking channel through which the money will be deposited here under the SNRR. And if we talk about the loans which are given by the IBU, right, those would not be considered as a part of the net bank credit of the parent bank. So because the bank is to sanction the loans under the priority sector lending guidelines, and further a minimum percentage, let's say generally we talk about 40% of the ANBC adjusted net bank credit is to be maintained, right? Or CEOBSC credit equivalent of off-balance sheet exposure is to be maintained. So whatsoever the loan which is sanctioned by the IBU, that would not be considered that would not be considered as a priority sector lending part. That would not be considered on the part of the parent bank. Clear with it? Further, IBU is not going to receive the liquidity support from the Reserve Bank of India because the RBI act as a lender of the last resort, but that particular protection would not be available with the IBU. Clear with it? Kindly do confirm at the earliest that if you have understood these points. These are quite important points. I hope that you must have understood these points. After that, the next topic, it's about the relaxation for the foreign portfolio investors entities at the gift city. First of all, it's about the permission. It's about the permission, right? So the SEBI, that is the Securities and Exchange Board of India, has permitted the FPIs, right, who are registered in India so as to trade on exchanges which do operate in the IFSC. So if there is any exchange which is basically trading or operating in the gift city, FPIs are basically allowed, which are registered in India. Those are allowed that they can be participating in these exchanges. That is basically allowed, right? So basically it allows the FPIs that they can be participating in the international financial products, right? That's the first part. Secondly, it's related to the trade in commodity derivatives, trade in the commodity derivatives. So FPs are permitted that they can be trading in the commodity futures, commodity options, and other commodity derivatives, which are basically traded on the IFSC platform. And third one, it's related to, there is exemption related to STT. No securities transaction tax will be imposed. There is exemption related to it. So the STT, that is the securities transaction tax, won't be applicable. and also the commodity transaction tax won't be applicable, right? And the fourth one, that's related to extended trading hours. So exchanges which are operating in the IFSC, those will be functioning approximately 22 hours day. So all the exchanges in the IFSC, those are going to operate 22 hours a day. So they can be aligning better way with the global market time. And definitely there is a simplified documentation for the FPIs. So they can be trading the IFSC exchanges without additional documentation requirement. There is no additional documentation that would be required for the FPIs. Further, it's about the capital gains. It's about the STCG. So the major incentive that would be, let's say, available to the FPIs that will be related to the STCG won't be there on the derivative trades. So if you're trading in the derivative, so if you're trading in the derivative trade is there by the FPIs, in that scenario, the particular STCG is waived off. It is waived off, right? But if the trading related to derivative trading is outside the IFS is there, then 30% of STCG is there in case of the FPIs. So this tax benefit would be available to the FPIs. That's very important. So if you're dealing within the IFSC related to the derivative trade, then no STSG, STCG, short-term capital gain. Outside it, 30% STCG for the derivative trade. And further, the sixth one, it's related to participation of the retail investors. So retail investors are also allowed so as to trade in IFS exchanges. That basically going to give the more depth to the market, more liquidity and more trading volume. So that is about the IFSC, that is International Financial Service Center and the gift city. I hope that you must have understood all the points related to it. So do confirm at the earliest that you have understood the points. If there is still any doubt, do let me know at the earliest. And now we are going to start with the new chapter. We are going to start with the new chapter, and that is going to the last chapter from the module A. That is technology in international banking. The next chapter that we are going to cover, it's about the technology in international banking. So what are the main things that we are looking upon, that why upgrading is required and further digital reengineering plans are there? Why it is the case? Because we want to make the bank more relevant to the customers, first of all. More flexibility, more convenience, more benefits of speed, and we want to develop the digital ecosystem, we want to develop the platforms, and we want to be ready that we can be using the resources more better way, right? And we want to become more proactive and agile to the customer responses. And further, we want to basically the self-assessment and further driving team work to react to the changing market conditions. That's very much required. So these are the major points. These are the major points that we want to upgrade the technology, that we want to upgrade the technology. So we want to enhance the customer relevance through flexible financial and non-financial products. That's the first point, right? And further, definitely we want to balance the speed of implementation and in-house talent development. And further, organization readiness related to the human resource transformation is basically required. That is also very much required. And then it's related to the self-assessment. It's related to the self-assessment. that there should be a continuous self-assessment. Regular monitoring must be there, and periodic performance review must be there. Cross-functional teamwork between the technology, operations, and business units, that must be there. So, what is going to do? What this self-assessment and for the continuous assessment is going to do? It's going to ensure that we are aligning with the changing market conditions. So let's say there is just some change, and if you're looking into that particular change, you are going to be ready for that particular change, and you'll be able to achieve your strategic objective through it, right? So that's the first point related to it. Now, what are the benefits and the limitations related to technology in Indian banking? What are the benefits related to international banking? What are the benefits and what are the limitations? Now, definitely, if we are basically using technology, the accuracy is there, much more speed, lower transaction cost, ease of doing business, compliance is better. There is reduction in manpower, the cost is reduced, the regulatory requirement has been reduced, and further, you can be looking into transactions much more well. There, you can be managing the data very well, and there is continuity in the business. So, there are so many benefits in that. But what are the limitations? The initial cost is very high. Technical glitches can be there. There can be like a online fraud, cyber fraud can be there. And further, there are limits, control limits for the withdrawal and deposits that must be imposed, because definitely in that scenario, if there is no limit, it can be leading to a very high amount of the fraud also, right? And definitely the customer service gets affected at the times, and security issues can be there. Cyber crime is a part of it, and increase of the external fraud is there, right? So these are the limitations related to it. And the digital platforms in international basically include the inward remittance online. It's related to the inward remittance online. And the other one, it's related to the outward remittance online. Trade finance portal is there. Foreign exchange rate portal is there. So we are to cover all these points specifically. What are the different, let's say, digital platforms that we are talking? We are going to talk about the EDPMS, IDPMS, and everything. So the first thing, it's about the inward remittance online. So inward remittance online is a secured online portal which is going to facilitate the inward remittances. So if you want to receive the payments in India from the overseas location, that's basically allowed through the inward remittances online. So it basically does enable online money transfer by the non-resident Indians from their country to the India. So it's a quick and seamless way, fixed and fair rates, 24 by 7 applicable, right? So that's the benefit about it. And the second one, it's about the outward remittance online, the facility which is available with the residents and the non-resident individuals, that they can be transferring funds abroad through the internet banking platforms, right? So it's very fast, it's convenient, it's secured, and for the all the purpose which are permissible for the LRS transactions, I have already told you, and which comply with the FEMA guidelines. So definitely for those purposes, you can be doing the uh, outward remittances, no issues in that, right? And further, it's related to the trade finance portal. Trade finance portal. That's the third platform we are going to talk about. So it's a web-based digital trade platform. It is web-based digital trade platform that's going to allow the corporate customers that they can be performing the trade finance transactions electronically, like initial trade transactions, authenticating the transactions, authorizing the transactions, completing the transactions in a paperless environment. So those all things can be done. Those all things can be done. And what are the major benefits? There are the templated transactions. Like for one particular trade finance transaction is to be done, you're not to basically go for the complete from scratch. You're not to do the transaction. There is a template like T1 is available. So you have to pick up the appropriate template and fill in the details, and further done. You can be doing the transaction easily. You can be bulk uploading the different transactions. Let's say you have to do 10,000 of the transactions for the trade finance purposes. So that can be done. You have to just upload the file and done. And further, corporate approval is there. Like the transaction will be done and will be entered by one and will be like checked by the other person, authenticated by the other person, authorized by the other person. And the transaction records would be available through the Swift copies which are available online. And further, there are the limits. There are the online access to the details, right? Like with what limit is sanctioned under the letter of credit, what is the available limit so far, what is the limit which we have utilized. All that data is going to be available online. And the role-based dashboards are there. The role-based dashboards, like if you're a clerk, then definitely the different menu will be available to you. And further, if you're an officer, then the different actionable items or actionable things will be available to you, right? Further, it's about the foreign exchange rate portal. So this is also the digital platform. So all the platforms we have talked so far, these all are the digital platforms we are talking about. And this platform is going to allow the corporate clients that they can directly be accessing the foreign exchange rates through the bank's internet banking system. So corporates will be connecting to the bank's dealing room in real time. So here is a corporate. So corporate is going to deal with the dealing room directly, right? So that will be the portal, through the portal for exchange rate portal, right? So you'll be having the access to the different rates that you can be accessing: the cash rate, term rate, spot rate, forward rate. So you can be accessing the multiple rates, right? Seamless interaction will be available. And further, advisory will be there from the bank's dealer related to interbank market rates, related to latest developments. And further, you can be getting the real-time quotation and audit trail, and the data is available on confirmations. So complete audit trail will be available, that what action was taken, to whom did you talk with, what rate was finalized, and everything that will be available. That will be available. The next 2 points that we're going to learn about, it's about the IDPMS and the EDPMS, and also about the one another point, that's the firms portal. That's the firms portal. So the three different points now we are going to cover. The next one, that is basically the fifth one, that is the EDPMS. EDPMS. This is Export Data Processing and Monitoring System. And this is operationalized by the Reserve Bank of India. RBI is operating it. And further, this is operationalized from 2014. And what is the purpose related to the EDPMS? Like electronic monitoring of the export transactions is to be done. Whatsoever the export transactions are there, the realization of the export proceed is there, that is to be monitored, but electronically, right? And further, under the EDPMS, the export transaction data, that basically flows electronically, like from custom authorities, from STPIs, from SCZ. Now, what is STPI? STPI is Software Technology Parks of India, and SCZ is Special Economic Zones, right? The data will be flowing from these, like from the customs, from the STPIs, from the SCZs. And what are the different forms which are available? The different reports which are available. It's the EDF form, that is export declaration form, or the shipping bill form, or the software exports. These forms will be available under the EDPMS, right? So what are the export proceeds or lodgement will be there? That is to be basically reported by the authorized dealer against these documents. Against these particular documents, that is to be reported by the authorized dealer bank. So advance remittances can be reported through the EDPMS, and if these export documents are realized, that can be reported through the inward remittances. And for the system-based quotient list for the exporters, let's say for whom the EDF, SP, or let's say Softex are outstanding beyond 2 years, so quotient list will be created. And for the EBRC, bank realization certificate, can be issued automatically. That can be done also. And the export transactions related to the service exports are not supported. So you have to take care of this particular point. The export transactions related to service exports are not supported under the EDPMS platform. Those are not submitted. Those are not basically supported. So this is a limitation. So this is a limitation for the EDPMS. The next portal we're going to talk about, it's the IDPMS. It's the IDPMS. So the IDPMS was basically why it was introduced, so as to facilitate the efficient monitoring of the import payments. We want to efficiently facilitate or monitor the import payments and compliance with the foreign exchange regulations. We want to do that, right? So the system was developed with consultation with the custom authorities, banks, and the regulatory stakeholders. So there is one very important reporting mechanism under the IDPMS, that is the BOE reporting. BOE is Bill of Entry reporting mechanism. Like for EDI ports and the non-EDI ports. EDI is electronic data interchange. So what is going to be happened, like in case of the EDI ports, in case of the electronic data interchange port, the importer is going to declare the AD code of the bank. So importer is here. So they will be giving the AD code, authorized dealer, basically code of the bank. And bank is going to download the bill of entry, BOE, details from the BOE master database under the IDPMS. And if it is related to the non-EDI port, the importer is going to submit the bill of entry for the non-EDI ports we are talking about. So in that scenario, the importer is going to do what? They are going to submit the bill of entry. They are going to submit the bill of entry to the AD bank, right? So they will be submitting this bill of entry to the AD bank over here. And further, the bank is going to upload this BOE details to the IDPMS portal. IDPMS portal. The bank will be authorized dealer, will be uploading the BOE, bill of entry, to the IDPMS portal using the manual BOE reporting format. And further, the uploading is to be done on daily basis, right? Other than that, the import payment monitoring can be done. The next function which can be performed by the IDPMS, that is the import payment monitoring. Like whatsoever the import that you have done, have you basically sent the payment for the same? So authorized dealer banks basically must be recording the bill of entry. That's a proof that the goods have actually been imported to India, right? And also we are to basically set off the import against the advance payment or the outward remittances, right? So those are to be taken care of by the authorized dealer bank. Further after that, it's about the firm's portal. It's about the firm's portal. Now, what is firms? It is foreign investment reporting and management system. Foreign investment reporting and management system. This is about the firms. So firms is also what? This is the online reporting platform. Like if you have received any foreign investment, that is to be reported to the firms system. And there is a SMF, that is a single master forum. Basically, this was introduced as to simplify the reporting for the foreign investments, right? And also there is one form, that is a consolidated reporting merging or consolidated reporting. And now there is FCGPR. There is FCGPR. Like from the 1st September 2018, the consolidated reporting has been implemented. So earlier there were the FCGPR and the ARF, right? But now these are ruled out and now there is consolidated reporting. There is consolidated reporting. The ARF is what? ARF is a advanced reporting form. And now the reporting is done through the revised FCGPR. Through the revised FCGPR. Now what is revised FCGPR? FC is foreign currency gross provisional return. That is to be filed. Okay. So that will be all related to this video so far. And the next part will be next video. We will be covering the next part for this particular chapter number 10. I hope that you must have liked the content of this video. And if you find this video helpful, make sure to like this video and further share this video among your friends and colleagues. So simply just do like the video and share the video if you want to get the complete PDF and the complete course for the CAIIB simply just write CAIIB and WhatsApp it to the number 83609 and I'll be sharing all the details with you, right? And if you want to get the complete PDFs free of cost, just do write saved for CAIIB and WhatsApp to the same number. Thank you so much and see you again in the next video.